Joining me here at the Beaver Creek Precious Metals Summit, I've got Mani Alkhafaji from First Majestic. Mani, thanks for doing this.
Thanks, Steve. Good to see you.
So, First Majestic just announced a pretty gigantic transaction. Was it last week or the week before?
Yep, just last week.
Just last week with Gato Silver. What can you tell us about the transaction? Why did First Majestic decide to move forward with this?
Yeah, well, we've been consistent with our message. We've been looking for, Keith built the company. It's our 20th year of anniversary right now. We built it over a series of M&As and accretive transactions, and we've been focusing on growing the business further. And our focus has been a silver producer. We wanted something that's in production, something that adds accretion to our portfolio in cash flow and silver production. And we've had our eyes on Gatos for quite some time, and we've been looking at them, and we've gone through a pretty competitive process that's been going for a number of months now, and we're glad to get it across the finish line now.
So in the transaction coming about, who reached out to who?
Well, there was a process, so the banks ran an official process that started in February, and a lot of names were involved, and a number of phases, and negotiations back and forth. So it's a pretty competitive, and I think everyone who was interested got a chance to take a look at it, and we're very glad that our bid was the winning bid, and yeah.
First Majestic's essentially a company that's been built through acquisition, right? Like you guys go and do one big mine purchase every 3 or 4 years.
Yeah, no, it's funny. It's we're doing the math the other day, and it seems like every 3 years we've done an acquisition. Going back, Santa Elena was 2015. Then 3 years later, Primero or San Dimas 2018. Then Jerry Canyon 2021, and here we have Gatos in 2024. So yeah, it's the timing. We're not doing it based on timing, but it's just coincidental how that works. But our goal is, to keep growing. We obviously have organic growth, from exploration stance, which is very important to us. But really, to take us to the next level, we need accretive acquisitions. Gato is bringing a lot to the table. It's adding about 6 million silver ounces. That's about 60-70% increase in our current silver production, and it's adding about 9 million ounces of silver equivalent. So it's taken us to about 32 million on an annual basis, and that's a number that we're quite excited about. It's putting us, at a new level compared to our peers.
Are there many cost synergies when you guys go and acquire a new mine in Mexico?
Yeah, I mean, being in Mexico is obviously very good for us. We're well established. We have a robust procurement system in place. We have our own central lab, for example, for assay testing. We also have our own central shop for overhauls and rebuilds. It's run by certified Sandvik engineers. So we realized, for example, with that one, about 1/3 of the cost of taking it to the OEMs. So this kind of stuff we can bring to the table. Group purchase contracts. So it's tough to put that on paper, but we know there's going to be a lot of synergies coming from another Mexican acquisition like Gatos.
So we look at this deal here, First Majestic. I know you guys did Jerry Canyon a few years back in Nevada. Does this mean that First Majestic is going to be focused on Mexico moving forward?
It's we go where Mother Nature is. We're after silver, really. Nevada was slightly different. Obviously, it was gold focused, but it was our way of giving us diversification geographically. But Mexico is obviously the number one world producer with silver. So if you want a good silver asset, it's tough to beat. We are looking. We're not going to stop. We're always going to be looking. Mexico, U.S., Canada, Australia. Nothing's really off the table. We're just not going to be going further south in Mexico. We're pretty comfortable in Mexico and above. And that's been our message, and we're consistent with that.
Okay, let me ask you about the Q2 financials. I think the market reaction was that costs were a little bit higher than many expected, and production might have been a little bit lower. How do you guys plan to address this going forward?
Yeah, again, so when we put our guidance, our original guidance, and then we revised our guidance, we knew H1, so Q1, Q2 are going to be a little bit on the softer side, mainly driven by two issues. So San Dimas, we've had some operational slowdown. We've been negotiating with the union, and that obviously has impacted production. And when you have lower production, your divisor is lower, so your cost per ounce creeps up on you. So we're showing elevated cost in Q1, Q2 for San Dimas. The other issue why we had a softer H2 or H1, sorry, was related to Encantada. We've encountered a water issue that occurred last year in June, and basically we lost 1/3 of the water supply for the plant. And we've been working diligently. We thought we'd resolve that issue much earlier, but we hadn't until recently. So in March or April of this year, we actually found a new water source. So we've been working in Q2 and Q3 to really build up the water level inventory of the plant, and we're getting the plant back up to the normal levels of about 3,000, 3,200 tons per day. So that issue is resolved now, and we're starting to see improvement in Q3 and Q4. Same with San Dimas. We're expecting, the union. We're finalizing negotiation right now, and things are moving in the right direction. So we're expecting to see an improvement in Q3 and Q4. So we should end the year on a better note.
Another more positive note is that you guys recently announced a discovery next to the Ermitaño mine. What can you tell us?
Yeah, so Santa Elena, we talked about that. We added it to the portfolio in 2015. In 2016, we made the Ermitaño discovery, and we brought that into production about 4.5, 5 years later, which is pretty quick turnaround. And that's been the main source. Now, recently, we made Navidad, the discovery of Navidad, and it's something that our geologists are quite excited about. So we've had, I think in the news release, we had 7 drill holes, 6 of which hit targets, and really exciting results. And we keep getting, really exciting results from additional holes that we're putting. So we'll be putting some more updates going forward. But we look at Navidad as a potential new feed for the mill in the next couple of years. We'll have to obviously drill it out a little bit more, define it better. It is a little bit deeper than Ermitaño, so the good news is it's close enough so we can utilize the existing infrastructure, ventilation and power, and we have our buildings over there, which is great. But we'll have to extend the ramp a little bit deeper, potentially put a shaft. It's still a little bit too early for us to really define it, but we'll be providing more updates over the next couple months.
So for any investors that are watching, what should they be looking out for over the remainder of the year?
So we're obviously working on closing the deal with Gatos. We announced the acquisition, but we have a vote coming up for both companies, so we'll be sending out the circular. We're targeting November, December for a special general meeting for the voting, and then hopefully close early 2025. Other stuff is our exploration program that's already in place. It's already yielded some exciting results, and we'll be providing updates. Jerry Canyon exploration just started a couple of weeks ago, so that's a 25,000 meter program that, again, our geos are quite excited about. We're drilling in a brand new area that hasn't been drilled, so we're targeting new discoveries. So, we'll be providing updates throughout. And at the same time, we're working on our 2025 budget right now, so we'll be putting out our guidance by January of next year.
Well, Manny, thanks for doing this, and we look forward to the transaction closing and seeing how things play out over the remainder of the year.
Yeah, wonderful. Thanks, Steve. Thanks for having me.